Thank you for joining us for another edition of You and Your Money. I'm Bryan, and this evening we'll be delving into the topic of short-term insurance. Retail sales have shown how cash-strapped consumers are, and this year we've seen medical aid increases ranging between 3 to 5% above inflation. Due to high interest rates, we've seen the price of all goods, including computers, cell phones, clothing, costs, new cars and food increasing. I would imagine this has taken its toll on increasing insurance premiums. And joining me this evening is Craig Poder, Director of the Poder Group, and in our spectators gallery is his father and his boss, Ruben. Welcome to you, Ruben. Well, good evening, Craig. Lovely to have you on the show.
Good to be back.
Craig, I mentioned consumers being stretched and really struggling in all these other areas. And in my discussions with healthcare consultants and healthcare experts, they talk about people cutting back on healthcare. How's that happening in short term, particularly in personal lines?
So, Bryan, there's definitely been a hardening of the market. Premiums are increasing and increasing considerably. If you have a look at the last couple of years, the short-term insurance industry has been hit by catastrophes, storm-related catastrophes. They've also had obviously this load shedding where you've had damages to appliances and machinery and equipment. And then you have a look at a couple of years ago, let's not forget the Sazia and riot strikes in and around the country. So all these different pressures are definitely influencing premiums, and also the bigger picture reinsurers are putting pressure on the local market. So you're having also obviously inflationary costs increasing on motor, spares and parts and those type of things, which is also having a major impact on premiums. So overall, Bryan, the market is under pressure. Short-term insurers are looking at their books, increasing motor rates, and obviously non-motor also.
Craig, let's just talk about one aspect. I know that renewals are increasing and getting higher. I've seen my own renewal move up. But let's just talk about one aspect, and I know it may be a minor aspect, but it's what so many South Africans are doing, is they're putting jewellery in their bank. And I've noticed in that aspect also why, I mean, when you talk about claims versus premium, I mean, I can't remember or having heard of any jewellery theft from safe deposit boxes.
So, Bryan, it's very often, it's not all about the risk for that specific item. It's also collectively how the whole portfolio is looking at. So the insurance companies may look at the non-motor part of the policy and average out the increase versus just specific line items. So when you have a look at items that are kept in the safety deposit box, there is still big discounts and big savings on premiums to have those items kept in the safety deposit box. And also, unfortunately, they have a look at the overall portfolio and how it's running. So you might have had an item outside of the safety deposit box where you've had a claim, for example, a cell phone or a laptop, and that would drive premiums overall on that specific section, and not specifically talking to the risk where items are kept in a safety deposit box.
Okay, insurers will say, we can't push this up, but we need to get more premium, and then they would average it out. Craig, let's talk about a client who phones you, been a client of yours for many years, who says to you, you know, I can't believe these increase in premiums. How do I go? And it's not about shopping around the market, because I understand, you know, obviously there's a loyalty to a company. And let me just put in that one. Is there any benefit today, the old days of ex-gracias, is there benefit about being loyal to a company?
Absolutely, Bryan. If you have a look at insurance companies today and we have a look at individuals, those policyholders that have had a long-standing relationship with their current insurers, it definitely makes a difference for a couple of reasons. You mentioned ex gratia payments. Insurance companies don't make ex gratia payments like they like they did historically. But if you've been a client and a long supporting client, they look at overall increases in premium. They have a look at obviously at claim stage. You know, how they best can obviously put you back in the position that you were prior to the loss. And of course, renewal increases. You know, if you've had a long-standing relationship with an underwriter, they do look at these things positively. So yes, it definitely makes sense to be with your underwriter and to have obviously a good standing and a good relationship.
And Craig, what's the correlation between someone who doesn't claim but's had one or two major claims, maybe a hold-up, a car stolen, something really major, versus the rest of their policy? Because I mean, how do insurance companies, they can never recover a car that gets stolen of $1.5 million today, and that's not the most expensive car, $1.5 million, and the insurer pays it out. Now, if that is now worked against your premiums, insurance companies are never going to recover that premium from you as the client. How do they deal with that in a specific issue to that individual?
So, Bryan, it is a difficult one for an underwriter to take corrective action where a client has had one or two claims that have made the loss ratio or made that policy a loss-leading policy for the underwriter. So one needs to just take into account, and the underwriter today actually underwrites that specific risk and not just generally. So, one would need to take, or the broker would need to sit with the underwriter and explain, hang on a second, this client has had one vehicle theft that has obviously changed the figures on the policy. Let's not penalize, because historically the client's been running well in terms of losses versus premiums. And very often insurance companies doesn't just take the last 12 months. They look at either a 3-year history or in some cases a 5-year history. So they look at different trends and they look at it in isolation. So the insurance companies do have a difficult time in making right in terms of the catastrophes, but they also understand that these potentially could be one-off events that actually affect the premiums.
But they still look at that one-off event against that individual policyholder.
Absolutely, they do, unfortunately.
So Craig, a client phoned you and said, Craig, I've been with you many, many years. I'm really struggling. What do you suggest? Where would you suggest in helping them to cut their personal lines, their motor, and so on? How would you suggest they go about that?
So, Bryan, very often clients are insuring the small items. When I say small items, maybe 1 or 2 jewellery items that actually drives the premium. We focus on catastrophe covers, making sure that your home is insured correctly, your contents, as well as obviously motor insurance is key and very important. So the specified items, that's where it becomes very expensive. So what we first do is we have a look at that area of cover and we ask questions. Are you wearing jewellery every day? Is there value in insuring the jewellery outside of the house? And very often we can look at cutting back premiums in those areas. And then you have a look at motor. Motors, obviously, premiums are increasing also considerably. Potentially having a look at increasing your excess to allowing putting pressure on the motor premiums, and likewise on the building and contents. You might have a 500 Rand excess under the building and contents. If you maybe increase that to a higher excess, that could drive premiums down. So there's different ways of looking at a policy and understanding your client's needs. And tailor making a policy for your client.
Will a bigger excess on motor and household Norris drive the premium down substantially? Is there some benefit in terms of driving the premium down against the excess you take?
Depends on the underwriter. Some underwriters, the discount is minimal, and with other underwriters, there could be value in increasing the excesses and just making sure, for example, if you're doing limited mileage, if you're doing less than 10,000 kilometers a year, there could be value in going to your underwriter and declaring that you're doing less than 10,000 kilometers a year, and would you be afforded a discount? So these are the type of things we need to obviously have take to the underwriters and understand, to try and assist the clients. But there's no value in reducing your home or your contents, because then you're obviously dealing with underinsurance, and then average applies in the event of a claim.
And Craig, experience for people living in apartments, living in clusters with security, in body corporates. Does it make sense maybe to can you take one excess a lot higher, like a 25,000 Rand excess on theft?
So again, it's very difficult to ring fence that specific peril and just take an excess on that peril, be it lightning or storm or theft. But what would be of interest to the policyholder is declaring the fact that you live in an environment where you have all the security, because very often underwriters discount the premium in line with your security, burglar bars, electric fencing, 24-hour security guards, controlled access. So you take that, declare it to your underwriter, and you'll be very surprised in some of the discounts that you get afforded on your policy. In terms of this higher excess debate, Bryan, it's also very important to understand what your basic excess is. So for example, if it's 5,000 Rand on motor and you add another 5,000 Rand, 10,000 Rand becomes a big number, and you need to work out based on your claims history and versus your current portfolio, is there value, on your discount on your current premium, is there value in actually doing that exercise?
Craig, something that's always puzzled me, all claims have to be reported to the insurance company, whether you claim or not. So how does that impact ultimately on the policy itself? I mean, if I've had a few claims, little scratch here and little scratch there, 2,000 and 5,000 and 7,000, and I don't report it to the insurers, I just have it repaired myself, could that impact, because we talk about fraud on policies, could that impact on non-disclosure?
Depends, Bryan. You know, our view is rather disclose or discuss with your broker what is material versus non-material. If you lose a pen and you decide not to claim, well, is that a material? Or if you have an accident with a third party and you do not submit a claim because you're sorting it out with your third party directly, that's material. So you need to actually debate with your underwriter and broker and work out what is material. We are of the view that disclose to your broker, your insurer, exactly what's happened historically. And again, mentioned earlier in the show, 3 to 5 years, it's very important to disclose what claims you've had. And very often the proposals or the questions that get asked before taking out a policy, have you claimed or not, or suffered any losses or not over the last 3 to 5 years? So that question is very often asked, and again, just make sure and discuss what would be material versus non-material.
So let's say this, you say report to your broker, but isn't the broker obliged to inform the insurance company?
Absolutely, absolutely. We need to do full disclosure and work out and go to the underwriters so to avoid any issues or questions being asked at claim stage. So we believe very strongly is underwrite at inception versus claim stage. So declare what is material, and even some of the non-material items. You know, you might have had a windscreen claim or a chip sorted or fixed. How does that materially affect your underwriters or the question? So again, you want need to discuss it and make sure that your broker gives you the advice.
And Craig, before we go to the break, fraud, is that having a big impact on premiums?
Absolutely, Bryan. I mean, fraud is causing a big issue in terms of not just general overview of the market, but there's no value in your policyholder or the insured inflating claims, because remember, at renewal, the insurance companies are going to look at your claims versus your losses and increase your premiums. If you're wanting to move from that underwriter, you have to go and declare to the new underwriter who's quoting on your portfolio the claims that you've had. So there's no value in inflating claims or obviously putting in fraudulent
And if
claims.
you know that a client's put in a fraudulent claim, no matter how big or small that client may be, how would you deal with it?
So, Bryan, the insurance companies have very good processes. You know, there's fraud lines, there's certain, obviously, people at the insurance companies that we would report it to.
Well, we're going to take a break. I'll deal with your emails when we come back. Stay tuned.